You're watching the latest news from financialmirror.tv. Global stock markets plunged on Friday and currency markets were hit by a flight from risk as economic decline and corporate damage gripped investors. European shares lost 8% and Japan's Nikkei tumbled 9.6%. The UK's FTSE 100 index sank 7.5% after the economy shrank for the first time since 1992. South Korea's Kospi index slumped 10% as the country's economy grew at the slowest pace in 4 years. The MSCI World Index, which has plunged 45% in 2008, headed for its worst year on record as credit-related losses and write-downs topped $660 billion in the worst financial crisis since the Great Depression. Russia's Micex stock exchange suspended trading until next week after shares slumped as much as 15%. Europe's Dow Jones Stocks 600 index slid 7.9%. Earlier, Japan's Nikkei slid 9.6% to 7,649, a 5.5-year closing low. The benchmark has fallen 50% so far this year. Treasuries headed for their biggest weekly gain since 1995. The 10-year yield fell 35 basis points this week, the most since May 1995, on speculation government and central bank efforts to revive lending won't avert a global slowdown. The cost of borrowing in dollars overnight in London rose as the increased likelihood of a global recession spurred banks to hoard cash even after policymakers pumped record amounts of the US currency into financial markets. The London interbank offered rate, or Libor, that banks charge for such loans climbed 7 basis points to 1.28%. The comparable rate for UK pounds jumped 19 basis points to 4.75%. The Libor OIS spread, a measure of cash scarcity, widened by the most since October 10. The pound tumbled below $1.53 in its biggest drop in at least 37 years, after reports showed the UK economy contracted more than forecast in the third quarter, bringing the nation to the brink of a recession. The decline surpassed that of Black Wednesday in September 1992, when the UK was driven out of Europe's exchange rate mechanism. Gross domestic product contracted 0.5% in the 3 months through September, said today the Office for National Statistics in London, more than the 0.2% forecast by analysts. The UK currency fell to $1.5269, the lowest level since August 2002. Against the euro, the pound weakened to a record 81.96 pence. Today's decline brought this week's drop versus the dollar to 11.5%. The currency lost 9.8% in the week when billionaire investor George Soros and other speculators drove it out of the exchange rate mechanism that linked the currency to the Deutschmark. The then UK Prime Minister John Major pulled the pound out of the ERM on September 16, 1992. Current Prime Minister Gordon Brown, formerly Chancellor of the Exchequer, described that day as Black Wednesday. The dollar hit 2-year highs versus a basket of currencies. The euro was down 3% at $1.2595, but against the yen, the dollar fell 5.3% at 92.61 yen. While earlier it fell as low as 90.89, its lowest level in 13 years. BNP Paribas reported there was a massive €25.5 billion net outflow from the Eurozone in August. Coupled with the $57 billion of repatriation flows recorded by US investors in July and August, the overall flow picture for euro-dollar has turned extremely bearish. BNP expects euro-dollar to target 1.2325. An emergency OPEC meeting on Friday reached swift agreement to chop production by 1.5 million barrels per day as a first step towards halting a deep oil price slide. International benchmark US crude has slumped by well over 50% from a record high of $147.27 hit in July. On Friday, it fell again to just over $63 a barrel. The decision was straightforward, Saudi Oil Minister Ali Al-Naimi said after the meeting. Of the 1.5 million barrels per day being removed from the September output target of 28.8 million barrels per day, Saudi Arabia would pump 466,000 barrels less and Iran 199,000, OPEC said. When prices were racing towards their July records, Saudi Arabia unilaterally increased its production to try to calm a rally, which was then perceived as out of control. It has already reduced supply slightly as global economic recession has destroyed demand and the oil price has plummeted, reviving bad memories for OPEC of the 1998 price crash when the market fell below $10. Asia and Europe should intensify coordination and cooperation to jointly meet global challenges, Chinese Premier Wen Jiabao said in front of leaders from more than 40 nations attending the Asia-Europe meeting. In the first major coordinated Asian response to the turmoil, China, South Korea and 10 Southeast Asian nations pledged to create an $80 billion fund by the end of June next year so that those countries could draw upon to fight off currency speculators. In his opening remarks to the ASEM summit, French President Nicolas Sarkozy called on Asia to support Europe at a crucial economic meeting next month in the United States, where leaders will discuss ways to end the turmoil. Sarkozy, whose country currently holds the rotating presidency of the European Union, is seeking to overhaul the Bretton Woods system that has governed international finance since the end of World War II. But the United States has been more cautious in its approach, stressing the importance of preserving the commitment to free markets, free enterprise and free trade. Before Friday, Asian governments had mostly limited their intervention to cutting interest rates, guaranteeing bank deposits and injecting money into the credit markets, without the kind of coordinated action taken by Europe. Thank you for watching FinancialMirror.tv.